Welcome to the Astute Prosperity Podcast with your host, John Way. Join us as we interview successful business owners and professionals, uncovering the strategies that fuel their personal, professional, and financial success. Discover what it takes to thrive.
All right. Well, welcome to the Astute Prosperity Podcast. This is John Way, the host. Our third episode today. So we have today is who we have today is Alex Asuncion from San Francisco. How's it going, Alex?
Not too bad. How about yourself?
Doing great, man. Doing great. So how I know Alex is we met last year, right? In Pace Morby, right? The Subject
Yep,
2 event.
yep,
Yeah.
yep. In
And
San
then
Francisco.
yeah, and then we started talking, chatting at the bar, and then we kind of connected afterwards, and you became a student
Yeah,
of
yeah.
the multifamily course. So, but yeah, so thanks for your time today. I really appreciate it. What we talk about here at the Student Prosperity Podcast is everything multifamily, and also want to learn a little bit more about you as an investor in the real estate world. Tell us a little bit about your story, and then I have some questions for you on the real estate and multifamily side of things. Does it sound good?
Yeah, definitely.
Cool. Awesome. Thank you,
Yes.
man. So yeah, I mean, I guess share with the audience and in terms of like what's your experience in the in general in the real estate world, and also what is your experience and portfolio look like now in the real estate world?
Yeah, absolutely. And I kind of want to go back to that story where we first met,
Okay, sure, yeah,
because
please.
it's kind of funny because I just started my real estate journey, I'd say beginning of last year, like really going hard in it. And as far as my investment background, I have an Airbnb that I bought, and I do Airbnb on. So I self-manage that one. And then involved in some flips. I just did a flip in San Diego. I just closed on. And going back to the story, like I mentioned, and how we met, I joined Pace Morby's because I was Pace Morby's group because I was looking at some other ways of how I can get into real estate with less capital, and that's when I started becoming interested in subject two.
Mhm.
But fortunately, the more I dived into it, the more I realized what my goals are, and my goals are to essentially you know quit my 9 to 5 like a lot of people, and I found that residential real estate is definitely a great and still a great way to build generational wealth, but definitely not the fastest path anymore like it was back in the day. And I started looking more into commercial multifamily and doing YouTube University. And it was funny because the timing was almost perfect because right when I was starting to go through that journey and learning through YouTube and other resources about commercial multifamily, I met you, at the bar, and started talking about commercial multifamily, and I was like, wow, this is insane because I'm literally just started looking into this, and I'm highly interested in. And yeah, you told me you had this program, and I was kind of scared to join another program, but this is after doing a lot of my own research. I know that this is the path I want to be on if I want to
Yeah,
scale in real estate.
yeah.
So yeah, that's kind of a little bit my background and why I joined your program.
That's that's awesome, man. Thank you. That timing was perfect.
Yeah.
Timing was perfect. Thanks
Yes
for
and no.
yeah.
And it's because I say that because, or like, right when I joined your program, I got my the friend offered me this deal for a flip, and then I was kind of like in and out of the program with your program and then this
Yeah,
flip, and
yeah.
I just know that now that it's over, I need to go all in.
Full, yes, exactly. Yep,
Yeah,
that's right. Yeah, this it is a very the multifamily syndication acquisition syndication it's very lucrative if you do it right, but you have to put in the time and to go all in. So yeah,
Absolutely.
totally,
Absolutely.
totally. Good man. And I mean, you're now in a good position mentally, and I can see in your actions, you're you're going all in. So that's good. Good stuff, man.
Yeah. Yeah.
Um, so so and so kind of going back to your story, like like last year. So you were saying that big picture wise, scaling scaling like by single family is may not be no longer to be that lucrative anymore. But so why multifamily? Like what's from your perspective and knowledge, why do you want to go into multifamily?
Yeah. And I sort of touched about this in my previous answer, but basically,
Mhm.
the ability to scale, right? Scale faster. And, residential real estate, like I said, is great for generational wealth. And maybe back in the day, that was the best way to quit your job and live passively through rental income. But in today's world, that's not the case. Um, and, commercial multifamily, I think, especially syndications, I think that's just the best move right now. I mean, you're going to be working with a team, uh, that has different specialties, so you're not necessarily alone in it. And then apartments. I mean, it's always going to be there. People are always going to be looking for apartments to rent, and I think it's just a great business model to be a part of.
Yeah, definitely. And actually, when you say just by syndication, uh, can you kind of explain what that means? I think a lot of audience might not know what syndication means, and also uh, like why is it like why are apartments like lucrative? How does that work?
Yeah. Well, for me, how I understand syndication is, you're essentially raising capital from, a bunch of investors, right? And these type of investors can be either passive investors or active investors. And then as far as the active investors, we all have sort of a role we play, right? Whether you're an underwriter or you're strictly just sort of a capital raiser, an asset manager, property manager. So those would be your active investors. And then you have limited partners where you're raising capital from. And these people are just, you know, like I said, they're just passive. Just, they fund they invest in your deals, and they expect a return based on what was agreed upon,
Mhm.
right?
Yeah, for sure. Yeah, so it's and I like and also kind of elaborate on that team structure because and uh I- actually you mentioned the team side of things. So like uh in multifamily, like you're not only investing in along with like your own money, but also other people's money. You're basically everyone's investing together, and also the team effort is also there. So like you're not in a lot of single family, the singles, doubles, triples. A lot of times I think it's uh your you can do it by yourself. Anybody can do it by themselves, right? But then in
Yeah,
multifamily, in the bigger stuff, you really do have to be creative in financing or be syndication be through the way of syndication. Um,
absolutely.
yeah. So in specifically like in multifamily as concerned, what are the profit centers? In other words, like uh, what are some of the benefits that you get through investing in multifamily?
Yeah, I mean, there's a lot. There's a lot of benefits, which is why
Yeah.
I'm so interested in being involved in it, right? I mean, you get the
Mhm.
tax benefits, you're getting equity. I mean, you're getting the cash flow, right? Um, and then even just getting the deal initially when you close, there's that acquisition fee, which is,
Mhm.
1 to 2% of the purchase
Mhm.
price. And
Yeah.
I mean, depending on the deal, you just do one and you're good for the year, right?
True. Yeah, exactly. If you're yeah, totally to provide that income. Now, yes, definitely. And so acquisition fee, you talked about that. That's for upfront. So that now what's so why is there an acquisition fee, or how does that, like, I guess, uh who takes that, and can you kind of elaborate on that?
Yeah, and absolutely. So as far as the acquisition fee, that's only going to be for those, like I said, the active investors, your general partners, the ones that are actively making the deal work and happen, right? So the limited partners wouldn't get that, but that's something that the general partners would receive upfront after that deal is closed.
Right. So basically the sweat equity, essentially kind of like a acquisition fee slash commission, upfront for
Yeah,
getting a deal, underwriting the deal, doing all the work to get the deal in the contract and all that, right? So
absolutely.
so besides the acquisition fee, you talked about the equity. Like, so help the audience understand, like, how does the equity work?
Well, I mean, when you buy a property, I mean, especially in commercial multifamily, you always want to see how you can increase the value, right? And that because that can be, doing some kind of renovations, processes, things like that. But that's the end goal. And commercial multifamily, what I love about it is in comparison to residential, where your value of your home is based on the comparables and in the market as well. Commercial multifamily is about all about how much rent you could produce, right? And so the more rent you can increase on your property, the more equity you gain.
Mhm. That's right. That's right. So how much yeah, it's actually, you hit a nail on the head, actually. It's how much more value, or how much value can you deliver to your tenants, and also how much can you improve their livelihoods, and how much can you improve their community, and as a
Yep,
result of that, you're helping them out, but then at the same time, if you're able to raise rents because of that, that also helps you out, it helps the investors out. It's just all a win-win-win-win situation, right?
yep, absolutely. That's what I love about it. So it's a win-win for everybody.
Yeah. And the equity side of things, like, it's also exponential too, right? Because,
Yeah,
like, when you were talking about, like, single family property, or singles, doubles, triples, quads, or even quads, like anything less than 5 units, you're when you're buying it, and when you're selling or buying, it's based on what? Based on
the
comps?
comparables. Yep,
Yeah,
yeah,
comps.
yeah.
And so when you're buying multifamily, what is it based on?
It's based on how much cash flow is produced on the property.
Exactly, right? So the more cash flow it produces, more valuable it is,
Hmm.
right? That's where really the profit, like, the back end equity profit center is made.
And,
Um,
and how I look at it too, it's essentially kind of like a business, right? When
yeah,
you do valuations on companies, it's going to be based on how much revenue and cash flow they generate. And so it's kind of like the
exactly,
same concept in commercial multifamily.
exactly, exactly. Perfect. Yeah, that's exactly right. Yeah, exactly. It's a lot of people might think that buying multifamily is just another property, but you're exactly right. It's like, when you are in the multifamily business, it is about a business. When you're buying a building, buying a community, you are buying a business. So it's all about profit and expenses and net operating income. It's all about that bottom line. So
Hmm.
how do you make that bottom line higher and higher? Um, and also you have to be cautious of making sure that you are providing value to the tenants while you are doing it. Because, like, if you just all you care about is increasing rent and not providing value on the other end, like you're gonna have a pretty crappy product. You
Right.
know,
No one's gonna rent, right?
yeah, exactly. Everybody, you're gonna have a pretty low occupancy rate, and that's not good for anybody. Um, so how is syndication model different than joint ventures?
Let's see here. Because joint ventures, you're kind of working together, and it's very similar in that aspect, right? But with syndication, there's also money that you have to raise, right? And you're raising money from, like I said, the limited partners who
Yes.
just want to be just passive, don't want to do anything, right? I mean,
Yeah.
maybe not necessarily anything, but they don't want to do anything involved with the deal,
Yeah.
right? Versus a JV, you guys are kind of working together, and it's just you guys are putting all the money in together, and it's usually better for smaller deals,
Hmm.
smaller properties
Yeah.
versus syndications. It's just, I mean, 4 people. I mean, for bigger deals, you need a lot of capital for that.
Yeah. That's
So
right.
that's
Yeah.
where I would see the difference in the syndication. You can, raise money from these limited partners while
Mhm.
still building a team that has different roles, like, such as property manager and asset manager, things like that, and they specify in these specific roles.
Right.
Versus JV might have to do one person might have to do multiple hats of things, right?
Yeah. 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 Definitely. I mean, yeah, totally. So joint venture, I think you're exactly right. Like just primarily joint venture are a couple of partners get together, they use their own money to buy a project, and they jointly own the property, right?
Mm-hmm.
They don't raise capital from anybody else. In a syndication, the general partners do invest their own money as a percentage of the total equity, but the majority of the equity comes from the raised capital, right?
Right.
And
Right.
from the limited partners. Now,
Mm-hmm.
limited partners are, sort of they're not really, I guess, necessarily they 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 don't most limited partners are there, want to be or remain limited partner because maybe they don't have the time, maybe they don't they want the return, they want the cash flow, they just have a 9 to 5 job and they have a life like outside
Mm-hmm.
of, and so for them investing in multifamily is, or becoming a limited partner is maybe because of that cash flow that they're trying to strive for, right? For as
It's
part
just
of their
another way
portfolio.
to
Yeah.
diversify for them.
Yeah, exactly. You got it.
Mm-hmm.
That's right. That's right. Um, all right. Well, those are all the immediate questions for our time today. Really appreciate your time, Alex. So one of the things that we'll start implementing on the show is actually, so you're one of the first ones that I actually proposed this to. Like, what's one book that you recommend that you've read in the past or recently that you recommend for our audience to read that you felt like that was super beneficial for yourself?
Yeah, we were just talking about this before the podcast, and I have it on here too. I would definitely say Atomic Habits. I think
Hmm.
that's a good, solid book, not just for real estate, but just for just getting your life together. If you have goals you want to achieve, I think this is the best book to read that because it's sort of building upon those habits and different strategies to be consistent. I'm rereading it right now because I know there's some things I need to work on. But I think it's a very good book because now it's something I could go back to as a resource for myself.
Nice. That's awesome. Thank you, sir. Appreciate it. Yeah, that's a great book. Um,
Yeah,
yeah, for sure. It's all about setting structure and habits to if you want something done, right?
Mm-hmm.
Yeah. Perfect. Well, thank you so much, Alex, for your time today. I really appreciate it, and thank you for your time today at the Student Prosperity Podcast.
Yeah.
Thank you very much. We'll see you next time.
Thanks, John.
You've been listening to the Astute Prosperity Podcast. Want to be featured on the show? Head over to astuteprosperitypodcast.com/guest and apply to share your success story with our listeners.